Are you entering your trades in a low probability market condition? You're entering market chops, market stops you out because the market is in a low probability condition. In this video, we're going to be talking about how to know how to spot a low probability market condition and how to spot a trendy market condition where market goes in one direction without consolidating. And when market consolidates, you really don't want to trade inside of the consolidation. You want to trade once the market purges the consolidation high or low, basically the range high or range low, right? That's when you want to get active. But inside of the range, you usually never attempt, or you never will. I mean, never attempt. I mean, you never want to trade inside of it, right? Now let's get into it. So, how do you spot a low probability market condition? The way you spot a low probability market condition is through ranges. Whenever you see let's just say in this case, I'm using the 4-hour time frame. When I find my range, I don't look at the daily, I don't look at the weekly. I primarily look at the 4-hour time frame because I'm an intraday trader, right? So if I'm looking at that 4-hour time frame, I'm going to look for a range. The market, so if the market is ranging and the market's not trending, market always goes in these two phases. Market trends, then eventually ranges, trend, ranges, trend, ranges, right? And how do you know market is ranging? Is by market creating a high and market creating a low, right? So whenever a market, let me get a quick drawing here for you guys. Whenever a market makes a high here, right? Just say, oh, that's a bad drawing. Oops, horrible drawing. Whenever a market makes a high here, right? Let's just say there's a high right over there. Market eventually tends to make a low, right? That right here, every time market goes around here, that's called to be a range. Now market is in a ranging boundary condition, right? So market what usually market like to do is either soup out the range low, eventually go up higher, right? It's not about just CRT, by the way. This is primarily the whole thing, the whole market, the way the market does it, right? Market will attempt to soup one side of the range, then this range usually goes with the higher time frame. So let's just say the higher time frame is bearish. Let's just say bullish. I mean not bearish in this case. It would be bullish, right? So then this is market condition is bullish. Market shoot that range low, eventually going to the range high, and eventually from here on in, market is trending, right? So that's how you know market is in a good market condition, and this is how you know market is in a low probability condition. It is not a low probability condition, but inside of it is a low probability condition. Over there, how come is it a low probability condition? Because inside, excuse me. So inside of the range, usually people buy and sell, right? And they put the stop loss below the range low, and they put and they put a stop loss above the range high, right? Meaning now there's buyers and sellers, so market is consolidating between it, right? Market will attempt to go down below one of the range. It could go upside and go back down, go below one of the range, eventually from here push up to the upside, or go up from here and push up to the downside, right? And this is how you know market is in low probability condition. And when do you want to participate in a ranging condition? The only time you want to participate is once the market goes down and total soups the range low or range high. Then you want to look to buy, because over here is in deep discount. Over here is in, you're basically buying low, you're selling high, right? Over here is as well as market is souped out the range low. Basically, is way more higher probability now, right? Now you're not stuck inside of this range, because once you're stuck in this range, you're gonna face a lot of losses, right? Because there's buyers and sellers going in between these ranges. Just you can see right over here. Today was a perfect example, right? I mean, yesterday we were bounding market condition. Market did not make any big moves, right? Because it was stuck in a range. There's sellers right. There's sellers stop loss right over here. There's buyer stop loss right over here, right? I mean, seller stop loss over here and buyer stop loss right over here, right? On this range low. So market consolidates right over there, right? And you could have a different one as well, right? And you can see ranges are subjective; they're not objective, right? And that's how you know how to spot a ranging market condition and how to trade it. Only time you trade it is once the extreme side of the range gets purged, and that is how you would avoid a low probability condition, by waiting for one side of the range to get purged. And how do you know market is trending? The way you know market is trending is Usually after the low gets purged, you can see there was a range right over here. Range low gets purged. Eventually, market is trending. How do you know market is trending? The way you know market is trending is when there is no ranges. So when the market gets a high and a low here, right? Market usually in this case made a high and a low here, and market never swooped it out, just went up here, right? I think there's an SMT over here. There's an SMT with a sculpted pair. Yep, there's an SMT with this pair right over here, right? There's SMT. So it prevented the swoop. And as well, something what could happen is there could be SMT. So market would range. Let me get it drawn again one more time. Market would, let's say, make a high. Oh, actually, oops. Market would, right? Make a high, right? Eventually range. When let's just say there's a range low right over here. Market would go down. It will not swoop it out. It will cause SMT. Eventually, it still go up. You know, the only time that will happen is when there's SMT, right? So when there's an SMT, it would literally prevents the swoop from happening. So it's still valid, but you want to de-risk because when the market swoops out the range low or range high, it brings in new traders, right? It brings in new traders. There's a lot of liquidity taken out from the market, right? So that means market is more volume, right? When there's SMT preventing that, you know, saying less volume, but you want to de-risk because it's more riskier, right? So that could also happen, as you can see right over here. Also happen right over here. And what else do we have here? And yesterday was the perfect example. Market swooped out this range high and instantly went to the range low, right? So now once it met this range low, there is no more ranges here. Now your brand new range is this right over here, this big candle, this this bearish candle, this bullish candle, right? So now you're inside this range. So now you have to wait for this SMT here, right? I mean, you have to either wait for SMT or range low to get purged or range high to get purged for you to take a trade. And you can see SMT happened. So you would have had a spot to look for a long here, right? Because SMT prevented it, but you will still have to, you know what I'm saying, de-risk because SMT prevents from swoops happening, right? So that means, which is not a good thing in the market, right? Now, the today example is right over here. Market made a high and market made a high right over here and made a low right over here, right? So market swooped out a high range high, we go to the range low, right? So once the range low gets met, we're no longer in a range. I mean, we're no longer in a range on this candle, right? Now we're in a new range. Our new range is right over here. This is our new range. Bullish candle and a bearish candle. You can see market did not go all the way down here because market's not longer in a range. It's in this bigger range. So now you don't want to sell. You don't want to. you don't want to buy or sell inside of this range. So you can see market rallied up and came right back down, doing nothing special here. You know, buyers or sellers were just playing around right over here, right? Because it's still in a range, right? Market is still in a ranging bounding condition because ranges are subjective, not objective, right? They go based on your opinion and what you think, right? Because some people would not call this as a range, they would call this as a range, right? And some people will be like, okay, no, that's not the range, this is the biggest range, right? So it's all based on your opinion, on what you see being a range. And that's how you spot a low probability condition where market ranges, where you don't want to buy or sell, or you want to wait for a extreme side of the range to get purged, then you want to trade. So how do you avoid on this low probability condition? And how I've already told you how to spot it, because the way I tell you guys the way I tell you guys to spot it is basically there being a high and a low. So once the market creates a high and a low, market's in a ranging condition, right? And how do you know when not to trade it is when the market did not purge out any side of the range, right? But when you know when to trade it is once the market purges the range high or range low, then you want to trade, right? Because those now market took a lot of liquidity, so now there's new market there's new liquidity in the market, so market should have more volume. It should make bigger move happen, right? Same like this, right? Market swooped the range high, had more volume to the downside. Market over here swooped the range high, had more volume to the downside. Downside, right? Right over here, swooped the range. They had an SMT that up moving, right? As well as SMT right over here and pushed up over here, all over here, and market started trending. And same thing right over here, swoop the range low. Market eventually wants to swoop the range low. We go to the range high, right? Just all over here did not meet there, because that would be the long-term goal, right? You can see market eventually did trend to the upside, right? And yeah, this is how you spot a low probability market condition, and this is how you avoid a lot of choppy price action. This is how you avoid a lot of losses from happening. This is how you know when to get in a market and how you're gonna get in a market, right? So yeah, thank you for watching. Like, subscribe. comment, share. I see you guys inside of Discord. Make sure you guys join our Discord. Peace out. We give crypto call outs. We give, you know what I'm saying, gold call outs. And yeah, see you guys later. Peace out. Join our Discord if you win the call outs. Limited time only. Peace out.